All right, guys, welcome to another Forex session. This is Euro USD, and this setup is for the 24th day of July. We are trying to get our setup before the market open. Please do well to subscribe to this channel so that you don't miss out of any of our daily analysis. And also note that this video is for educational purpose only. Okay. Now let's look at the chart. Now I told us yesterday. I think we did this setup. That should be 2 days ago, and I told us that I don't have business with this pair. I don't have business with trading Euro USD until the markets break this structure, give me some level of retracement, then I can consider taking a sell trade. Now, when the price was at this level, I know some persons took a sell trade. That's a good one, but I didn't trade this pair because I have to stick with my setup. Now, as you can see, the setup is just playing out after 2 3 days. And what this should teach you is that you must not trade every day. It's not a must, you must trade every day. No, you must not trade every day. Just do your setup. Just pick some pair that you know you understand their price movement to some extent. Pick them, do your analysis. Now you may just enter one or two trade or four trade in a week, and that is enough. That is really enough. Let's assume I enter this trade. This is one almost 1:5. If I enter this trade 1:5 and the market run from this level to this level within a week, that is a massive profit. So if I'm risking $100, I'm making $500, so which is good. So if I have this kind of trade 2 3 in a week, that is a massive profit. So you must not enter so many trades. Just look for good trades and look for a trade that have a lot of confluence. Now, as you can see, this is downward trend, like I told us in the previous day's analysis. Downward trend, upward consolidation is a continuation pattern. I told us that I was expecting the market to break from this level, give us some good level of retracement, then look for an engulfing candle to take a bearish engulfing candle to take a sell trade. Okay, that was our setup. But please, I want you to know something. I want you to know something. Now that the market has broken out from this structure is not enough for you to start selling. As you can see that you can see the weak rejection. This could be a fake out. This could be a fake out. The market might still uh, move to the upside. So that possibility is not out. Okay. The possibility of the market going to the upside is not out. Of course, our setup is telling us is a sell, is a seller's market, but that does not mean that the market cannot go to the upside. Now, let's look at 30 minutes time frame. Let's see. Now, as you can see, the market is giving us some good level of retracement. I told us that always wait for full price action retracement. As you can see, that's what the market is doing right now. Now, once the market break out of this vertical minor structure with a bearish engulfing candle, that is your sell trigger. That is your sell trigger. Okay, and then you can actually uh, uh, get a good risk reward from this setup. Okay, now I also told us that the possibility of the market going to the upside is not out of it, because you can see, if you look at the 4 hour time frame, the weak rejection was very obvious. But if you come to smaller time frame, you can see that the weak rejection have a lot of doji. Like I would say these are just doji. Like there is no much buying momentum. So that will tell you that yes, the market can move to the upside, but the possibility is low since the smaller time frame is having a lot of doji candles forming. So that tells us that the sell possibility is still very, very high. But don't start selling now until this trend line, this vertical support is broken. Then that should be your trigger. Okay. So what is our setup for 24th of July when the market opened is that at the break of this structure with a with a bearish engulfing candle, that is our trigger. Okay. So that is that for Euro USD. So just see, let's see what the market will do. You can do your own analysis and let's see what we can get from this pair. Okay, so I'll be trading this, but I won't be entering now. I'll be watching the pair. And also another reason why I'll be careful trading this, because 24th is a Friday. That's the the market should be closing. And Friday the market most of the time don't actually move a lot, but that does not mean that you cannot make some profit that day. So I may not be, if I trade this, I may just, I don't leave my trade to run. uh I don't leave my trade to I close my trade. I don't allow my trade to run into the next week. I don't do that. I don't know why, but if you allow your trade, if you leave your trade to run, if you see an opportunity, you enter. You can get your profit around Monday or Tuesday, depending on what the market decide to do. Okay, so that is that for Euro USD. So what was our plan again? At the market retrace back to this level at the break of the minor structure with a bearish engulfing candle. That is our set trigger. But what about if the market decide to break back into the structure? The market can try to break into the structure. They just wait for retracement. Then you can take the price to the upside. So that is also a possibility. But our first possibility is that the market will break to the downside, but also watch out for the market breaking into the upside, because I've seen traders that we keep on entering to the market, even though the market have decided to go back to the bullish side of the chart of the market. You see some traders still selling, hoping that the market will reverse back to the downside. Please don't assume and don't hope. Just follow the candlestick and follow the price action. All right, that's for Euro USD. So do your own analysis and let's see what we can get from this market. See you in the next pair. Bye.